Hello friends, a very warm welcome to my channel. In today's video, we are going to analyze a very strong company in the logistics sector, which is VRL Logistics. So before we begin, a small disclaimer that this video is only for education purposes, as in all our analysis videos, we just bring forward the positives and negatives about the company through fundamental analysis, and we leave it up to you to decide whether to invest in the company. If you are new to this channel, please do subscribe and hit the bell icon. And if you have not joined the Telegram channel yet, please do join, as we discuss a lot of news, views and analysis on a daily basis on our Telegram channel as well. So let's get to the fundamental analysis of VRL Logistics. So VRL Logistics is the largest fleet owner of commercial vehicles in India. It's a leader in surface logistics and domestic transportation of goods. So whether it's a full truck container load or a part truck load, VRL Logistics provides all kinds of surface services, and in part container loads or the part truck loads, VRL is the market leader in India. It was founded in 1976 by Dr. Vijay Sankeshwar, and his son has also joined this business. The company owns more than 5,000 trucks. So this makes this company very different and brings a competitive edge in the company, as this is not just a third party logistics provider who just does the booking from the customer and books the third party truck. They have their own fleet of vehicles, and all the transportation which is done across India is done through their own vehicles itself. They have a strong network of more than 1,000 branches in India, covering all the possible main sectors in India. They have 47 transshipment hubs, as they operate in a hub and spoke model, and they have more than 7 lakh clients, so there is no client concentration. Not even a single client contributes more than 2 or 3% of the revenue for this company. So let's talk about the management of the company. Dr. Vijay Sankeshwar, who is the chairman and managing director of the company, he was the founder of the company. He has brought the company to such heights, and he has done his BCom from Karnataka University. He has more than 3 decades of experience in this industry. He was a former member of parliament and was also elected the member of central committees in India. Now let's talk about the business of the company. There are mainly 3 segments of business. One is the goods transport business, second is the bus operations, which is related to the passenger travel, and third business is sale of power. It will be interesting to note that 2 out of these 3 businesses the company has decided to sell or remove from this company, and they will be shifted to their private company. So starting with their first and the main business, which is the goods transport business. In this business also there are sub segments, and the LTL, which is less than truckload, which is a part truckload, contributes almost 89% revenue of this company. The full truckload contributes 10%, and the courier service contributes just 1%. So the company's concentration is not on the courier business but on the bulk transport business. Now when we talk about the less than truckload, which is the LTL, the domestic transportation of goods across the country happens through this mode of transport from godown to godown basis as well as the door to door basis. So if somebody wants to transport goods, which is a part truckload, from one city to another city, from one godown to another godown of VRL, that is possible, as well as door to door service is also possible, where they charge some amount extra but they deliver to the doorstep of the customer. In this segment, this is the market leader in India, and no other company has this size of operations. They own more than 5,000 vehicles which do this mode of transport, and whenever the need arises, whenever they have a season, they hire outside vehicles also to supplement their existing fleet of vehicles. In this mode of transport, the consignment sizes generally range from 1 kg to about 40 tons. So you can imagine the difference in the scale of operations, and more than 90% of the vehicles are almost debt free. So majority of the vehicles are their own, and there are no loans for the purchase of the vehicles. This business, they operate in a hub and spoke model. Now what is hub and spoke model? They start a main godown or a hub, and from the hub they distribute the goods through different small warehouses and in turn to their customers. So in this, what happens, the entire load which is carried from one city to another, it comes to a warehouse, which is the hub, and from hub to their small warehouses it is transported and then to the end customers. So what is the advantage of this model is the cost efficiency is improved, and in turn the margins of the company is improved. So this is the network of the company. It operates in more than 23 states, 4 union territories, and they have more than 1,000 branches across India, and they have 47 hubs located at different places in India. So such a strong network is built over several years, and it is not easy for a new company just even if they have funding to establish such a such a strong network in a short period of time. Now, if we talk about their 5,000 vehicles in detail, these are the different capacities of each vehicle, and in each capacity these are the number of vehicles. So when we talk about 50 to 20 tons, they have about 38% of the vehicles in this category. When we talk about 20 to 25 tons, it's about 20%. When we talk about 10 to 15 tons size, it is about 10%. Now let's talk about their second sub-segment in the goods transport business, which is the full truckload. In a full truckload, there is only one customer who books the entire truck, and this truck is loaded from the customer's warehouse and it is delivered to their end destination point. So there are no other stoppages in the middle to load the goods of other customers. This is generally done by customers who have the entire bulk of the loads, and as a company also, VRL typically earns more as the entire load is taken by one customer itself. The third segment which this company operates in is the courier services, which is under the goods transport business itself. So in this business, the company has not much of concentration, as this is a small ticket size business. So they mainly operate in Karnataka and a few other neighboring states, and generally this is provided to some walk-in customers which come to their offices. Other than this, there are some other additional capabilities which the company has in the goods transport business itself. They own a fleet of more than 100 vehicles like Maruti, Nissan, Hyundai, and these are some special capabilities which the company has, that they have special trucks to carry the vehicles or the cars like Maruti, Nissan, Hyundai, etc. They have some special capabilities or trucks to carry liquids and chemicals, and some of the products like fuel, molasses, etc. are also carried by this company. Now coming to their bus transportation business, they also operate nearly 300 buses in selected southern India states. But we will not talk about much about this business, as the company has already decided to hive off this business and sell it to another entity which is their privately owned company. At present, this business contributes about 230 crores to the revenue of the company, and after hiving off, this revenue gets reduced from the total revenue of the company. So the third business segment the company operates is in the sale of power. They generate power through windmill operations. They have 32 windmills with a capacity of almost 40 megawatts. The company has decided to sell these windmills also for a consideration of 52 crores, for which 48 crores of consideration or advance is already received. So this also will be sold from this entity. Segment wise revenue, if you see, the goods transport contribute about 89% of the revenue, the sale of power just 2.5%, and bus operations 8.5%. So roughly about 10% of the revenue will get reduced from the top line after they decide to sell these two businesses. A little about the industry. The logistics sector in India is about 160 billion in size presently, and it employs more than 22 million people. So as we are talking about the Indian economy growing in trillions, the logistics sector will also play a key role in the growth of the economy. The road transportation holds about 110 billion market size in India, and this is broadly divided into FTL and LTL. And as you know, in LTL, VRL is the market leader in India. LTL contributes almost 35% of the business in the goods transport category. Another key trend which you will observe in this industry is this industry is highly fragmented, and there are a lot of small players which just operate 5 to 10 trucks. So there is a trend that people are willing to work only through the organized retailers, and as this trend keeps increasing, the business will shift from the unorganized players towards the organized players like VRL Logistics. These are the main competitors of the company. Another thing to note that all these competitors are not the ones which own their own fleet of vehicles. So a few of them will be third-party logistics players which are not direct competitors of the company. Now, how is this company better than its competitors, or what is the economic moat? The management has more than 3 decades of experience in this industry. They have their own infrastructure, like they have their own fleet of vehicles of more than 5,000 vehicles. They have their own 1,000 branches, 47 hubs. They have their own repairs and maintenance centers. They maintain the entire inventory which is required for repairs and maintenance. They have their own fuel pumps also, and they have tie-ups with the fuel companies. They are market leaders in LTL segment in India. In terms of customer base, they are well diversified, so they are not dependent on any customer for majority of their revenue. The top 10 customers of the company just contribute 3% of the revenue, and they have the in-house technology developed for maintaining the entire business. They have their own software and their own MIS reporting systems. So all these things are created or built over 3 decades, which is not easy for a new company to replicate. So what is the growth outlook the company is giving going further? There are different ways in which this company will grow. The company will keep increasing the number of branches which they have every quarter. So their penetration increases, and the people booking the trucks through their different branches will go on increasing. They are planning to sell their bus operations business and the wind power business, and they also have one aircraft which is they bought it for a chartered aircraft business. So all these unrelated businesses which is not related to the goods transport, entire thing will be sold. So they will get huge amount of money when they sell these businesses. They will repay these debts. So the bottom line will improve as the interest cost will go down and the margins of the company will improve, and the company will focus more on their main business, which is the goods transport business, and that will grow more aggressively. They've already done a capex of about 169 crores in the first half of this year, out of which about 152 crores was the goods transport capex. In the first half, they have added almost 97 branches and 377 net amount of vehicles were added. Like this, every quarter, the number of vehicles, the number of branches will go on increasing, and the company will penetrate more and more deeper to the underpenetrated and unpenetrated areas in India. What are the risks which this company has to face? There are several disadvantages also when the company operates or owns their own fleet of vehicles. The business is not a asset light business. They have to spend the entire capex on their own, and they have to hire the entire drivers, they have to maintain their vehicles. So there are a lot of challenges which the company has to go through. Of course, over a period of time, they have developed systems in place, they have processes in place, and they have their own controls to manage these things efficiently, but still it's a challenging task for a company. This is a very highly fragmented industry, and there are a lot of competitors in this industry. The fuel prices is always a challenge, as and when the fuel prices increase, the margins of the company are directly impacted. The government also can take any kind of policy decision which impacts the business of the company, and one of the main decision which the government is taking is the scrappage policy. When the scrappage policy is implemented, more than 1200 vehicles of the company will have to be scrapped, which is almost 18% of the total fleet of the company, and the company has to spend the entire fresh capex to refill all these vehicles. So that will be a huge cost for the company. These are the main challenges or risks for this company. Now coming to the financials, after discussing the business model in detail, if you see the revenue trend, the company is growing in a decent way, but in the last 5 years, mainly due to the COVID, the revenue is in a stagnant manner. As a history also, if you see, the company has not been, in the last 5 or 10 years, the company has not grown very fast, because the scale of operations are such big that it's not possible for them to scale up very fast at these levels. EBITDA is steadily growing. It has gone up from about 235 crores to 400 crores. EBITDA margins have improved to almost 17%, but in the earnings call, the company says that the fair amount of margin which the shareholders can expect is about 15 to 16% at the EBITDA level. And if at all the margin falls less than 15% from EBITDA, the company would prefer to take a rate hike in their operations to maintain the EBITDA margin at 15%. In terms of profit after tax, it has gone up from about 90 crores to about 160 crores. But as a history, if you see in the last 10 years, even in the years where the revenue has grown, the profit has not grown that much. So that is one of the reason why, if you see on the chart, the stock price consolidates for years together. In terms of profit after tax margin, although the EBITDA margin is high, still the bottom line, which is the profit after tax margin, remains under pressure, or it's slightly on the lower side, being maintained somewhere around 4 to 5%. Lately it has gone up to about 6.7%, but going further we have to critically watch whether this is maintained at somewhere around 5% or not. In terms of share capital, the company has done a buyback recently, due to which the share capital has gone down to 88 crores from 90 crores. The reserves are steadily maintained or steadily growing. They have gone up from around 500 crores to 563 crores. The borrowings have gone up from about 81 crores to 537 crores, and the debt equity ratio is 0.95, which is slightly on the higher side, but these borrowings will be reduced when the company sells its all the other businesses other than the goods transport business. They are very low trade payables. The fixed assets have steadily grown from about 600 crores to about 1000 crores, because the company goes on increasing their branches as well as the number of vehicles which the company owns. The company doesn't give much credit to its customers, so the trade receivables are just about 60 crores and the debtor days are just 10 days. In terms of cash equivalent, there is not much cash on the balance sheet. It is just about 14 crores. In terms of cash flow, the company is doing pretty well. The operating cash flow, the company has generated about 370 crores in FY22, and in the last 4-5 years, if you observe, the company is steadily generating good amount of operating cash flow, and it is always positive. In terms of free cash flow also, the most of the years the company has been positive in terms of free cash flows, except in FY19 where the capex was higher. In terms of ROCE also, the return ratios are good. They have done about 23% of ROCE in FY22. Now let's look at the shareholding pattern. The promoters hold nearly 70% of the company, which is a good shareholding. public holds about 10%. DIIs and FIIs also have shown interest in investing in the company. DII sold about 14.5% and FII is about 5.8%. Now let's talk about the valuations of the company. The market cap is about 5,000 crores, revenue is about 2,800 crores. In terms of EBITDA, it has done about 17% recently, ROC 23%. So the return ratios or margins are pretty decent. In terms of price to earning multiple, it is trades about 25 times. 5 years median PE comes to about 29 and market cap to sales is about 1.77x, whereas the median market cap to sales is about 1.3x. Price to book ratio is about 6.7 times and the 5 years median is 4x. So in terms of valuation, presently we can see that the stock is fully priced. So it is always good to wait for a small correction in entering this kind of a stock so that the risk and reward is in our favor. Or if somebody really wants to play the momentum and wants to enter at the present levels, then he has to maintain some stop loss. Another thing you should remember in this company is this recent growth post COVID. The freight rates and all have increased substantially. So the growth which we see in the company will not be exactly because of the volume growth. There will be a slight impact of the value growth. So as the inflation reduces, so there will be a slight impact on the revenue front. So our valuation multiples also will change accordingly. The stat auditors of the company are Messrs. Kalyaniwala and Mystery LLP. The auditor's remuneration is about 70 lakhs. ROE is 25%, which is very good. It's a dividend paying company. Director's remuneration is about 10 crores, which is reasonable for this size of a company, as there are several directors and there are no significant related party transactions involved in the company. Now, if you look at the chart, as we have discussed, the revenue has not shown a steady growth or a super fast growth, and the bottom line also is kind of range bound in the last 5-10 years. So you don't see a steady uptrend in the chart, long-term chart when you look at. The stock gets into consolidation, it consolidates for a very long time unless the revenue and the profit substantially increase for it to give a breakout, which happened post-COVID. So in terms of valuations, as the valuations are fully priced, as an investor, one should wait for a dip to enter the stock where the risk and reward is in our favor. Around 400 to 450 levels will act as a strong support for this company, where somebody who is interested in the business model and totally satisfied with the future outlook of the company can consider entering at those levels. So this is about VRL Logistics. So let us summarize our discussion by discussing the thesis and antithesis points. In terms of the thesis points, they are the market leaders in India in the goods transport segment, specifically the LTL category. They already have the entire infrastructure established, which is not easy for another company to replicate. They have personally used the service of the company and they are working in a very organized way. So there is already a trust which the entire market has on this company, which is not easy for a new company to established. In terms of margins and return ratios, when you compare with other logistic players, this company is doing very well, which is not easy to find in this sector because they have their own infrastructure, whereas the others are the third-party logistic players. And as a sector also, this is a sunrise sector, as in the next few years, we expect the Indian economy to grow pretty well. In terms of antithesis points, there is huge competition in this sector, as the competition is from organized as well as unorganized players. Vehicle scrappage policy is a big risk to the company, and if it is implemented strictly, nearly 18% of the vehicles of the company have to be scrapped and new vehicles have to replace the existing vehicles. It's not an asset-light model. The company has to grow by incurring capex. In terms of growth, the company in the recent years has not shown very high growth. So all these points have to be kept in mind whenever you're investing in this company. So this is about VRL Logistics. I hope you like the unbiased analysis. If you like it, hit the like button and subscribe to the channel. If you want me to make videos on your favorite stocks, don't forget to comment the name in the comments below. Thank you for watching and have a wonderful day.